Hi, good afternoon, everybody. This is Mark Lambert, which I am a member of the Positive 200 Trading Group and also the Harmony of Discord Trading Group. I just want to do a quick analysis that encompasses a little bit of Gann style analysis and also Elliott wave and wave formations. And just to give you a quick recap of where I think we are right now, it's March 19th, 2012. And I think we're at a very, very pivotal area right now in the market. First things, I'm going to take a trading bar angle using a Gann 2x1 angle in this particular low. And as you can see, the market has been basically using this as support and resistance since that date in particular. And right now, as it is, as of Friday, and this date has only been updated up until Friday. You can see we're bouncing up along the bottom of this trend line. And usually when you're bouncing along the bottom of a trend line, sooner or later you are going to give way and start to move down. So with that said, I'm going to shift this now to looking at calendar days. There's another situation. If we take a look at this swing high, which occurred on 10/27/2011, and we move forward in time as of today, 3/19/2012, we are 144 days, calendar days forward. With Gann analysis, 144 really has a very strong connotation. It's part of the square of 12. It's also a pentagonal number of 72 degrees, 144, 216, 288, and 360. Divide that, what we end up with is basically a pentagram, the divisions of a circle of a pentagram. So we're going to remove that, and now we're also going to go down to weekly data. And I know in the past, one of the things that's very, very important to me, which I believe we get lots of our price analysis from basically the first inflection that a market makes. And what I mean by a first inflection, as you can see, we've done a series of lower highs and lower lows moving down up until the March 2009 low. And then all of a sudden, we did a first inflection. A first inflection would be the first wave that moves against the current trend. And that first inflection, you can usually tell when it's happening. One is by angular motion. It usually will move up in a steeper angle than the previous wave of the same degree. If not, it will reach the top of the previous wave of the same degree, which, as you can see, if we were to strike a line right across the top here, let's put a line, you'll see what I mean. We move forward, and you can see that we had breached that top of this previous wave. So which is telling me that the market wants to grow and start moving forward. So with all that importance, we believe that this area, and obviously the low, is places of very, very strong importance. And if we take a look at this, what I'm going to do is I'm going to pull some time forward from here. Now this is a weekly chart. As of this Friday, which was the March 16th, 2012, we have done 144 trading weeks, which is basically the same connotation as the 144 trading days that we've had, plus the fact that we're up against an angle also. Let's take a look at the S&P 500 cash index. The S&P 500 cash index right now is at a very, very pivotal point. I'm going to get rid of this channel right now just to show you how I would get to that point. When you take a look at a channel, a lot of times, or a channel, or I guess you could say a trend line, you want to use two kinds of trend lines. One, okay, is I'm going to go right from the exact high of this wave, and I'm going to go to this high of this wave. Okay, get this tool back down, and I'm going to thicken this so you can just see it a little bit better. And I'm going to extend it to the right. Okay, what you want to do with trend lines is you want to find something that either goes from the extreme highs of the waves that you're looking at, and then and then start taking trades basically off of those times when you're breaching it. But when you start to see pokes up above the top of this trend line as you strike that, that's sort of telling you that the market is looking for the extremes. And when you want to look for the extremes, what you want to do is take a trend line and basically encompass all those bars within that trend line. As you can see, we've had a small throwover at this point in time, which I'm going to get into in a second. I'm going to form another trend line. I'm going to put a support trend line in. Same thing with the support trend line. What you want to do is you want to go down to the bottom, move to the next visible wave, which would be this one, and this would be the trend line. As you can see, we've counted up 5 waves since this particular low right here, which started on November 25th. Oh, I'm sorry. I'm looking at the wrong spot. December 19th, 2011. And with that said, I believe if I was to look at an Elliott wave count, which I do not really look at Elliott wave counts beyond such, beyond anything that lasts more than a few months at a time, because I really don't believe the patterns hold over, as some people would espouse, thousands of years, hundreds of years. I really don't care. I'm not going to be here to trade that at that point in time. But when you take a look at this, this does look like we've formed a diagonal. I believe if I were to use like a longer range Elliott wave count, we've done a W, X, and Y configuration, and we are in the last wave of Y, which is another ABC configuration. I believe this was X at this point in time. We have A, B, C. I'm sorry, I might have misconstrued that right here. I'll have to bring up my chart at the end of this presentation. But anyways, this is right here what I believe to be an ending diagonal. This is the same chart right here, which is using the same configuration as this, except for on an hourly basis. And with that, when you take a look at the last move up, what we're looking at is a consecutive series of 5s. We have 1, 2, 3, 4, 5. And then within that, starting from this bottom where we have again 1, 2, 3, 4, 5. And we're up against a trend line using basically log scale. And with that, when you start to look at the day counts, the week counts, the form that the market is making, the wave counts, today could be a very, very pivotal day. It's March 19th, 2012. I wouldn't really put it past the market to bounce a couple more times up against this trend line before it finally does give way. And if it does give way, the first target I would look at to basically find support, I would find like this. I would take a trend channel. I would strike it from the top of this wave. And let's say that this does top today. I would strike it to the top of this wave. And then from there, I would go back down to the second wave. And the first initial target I would look for would be for the market to move down to this trend channel. As for how much time it takes, I really can't tell right now. I do have a lot of timing that does come in at the end of the month, early April. So who knows, maybe if this does top out over today or tomorrow, we can move down for the next couple of weeks. And then at this point in time, we will probably be looking for some type of support just to stay on the safe side. With that, I'd be looking for a 3-wave configuration. Even if it does continue and make 4 and 5 waves, and this is indeed a very long range changing trend, it really doesn't matter. The 4th wave may take several weeks to form, and if you're looking at this as a swing trader, as an investor, do you really want to be in the market at that time? You're better off taking the profits from 3 waves, get back out of the market, let the market show you its hand, what it wants to do, where it wants to go, and then it could be another long, who knows. But that's just the way I would look at trades, and I wish everybody good luck with this, and everybody have a great day.